But if we turn over to TradingView, you can see the P&L right here from today. Again, I traded AUD USD. It was a pretty quick trade this morning. I could have been done within an hour, but I ended up letting a piece of it stay in. And as that piece stayed in, it came closer and closer to my stop loss in profit. There's a little hint at what we're going to talk about today. And that's where you see this top position here only out for about 4 pips. But if you look at the open prices, you can see I was in at 0.6660 and 0.6659. So very close with those two entry prices, just about 1 pip in difference between them. But I split my risk there between the two. And that's what we're going to focus on today, to talk about how we can prevent really good trades or even mediocre trades from turning into losers once they go into profit with us. We first have to understand how we determine the difference between a really good trade and a mediocre trade, an okay setup. So again, with the P&L, you can see the two open prices, you can see the way that those were closed, you can see how quickly they were closed, and if we turn over to TradingView, you can actually see what happened to AUD USD today. Clearly, it fell off a cliff here based on some Euro and US dollar news, but I was still able to get in this morning at about 5:15, 5:30, and I was able to make money, as you saw on the P&L, lock my stop loss to make sure that I didn't lose any money, and get out of the trade in profit before this massive fall, before this massive drop off. So let's talk about how I really determine the difference between a good setup and a bad setup. Now today, we have what I would consider a C setup. I grade my trades A, B, or C, and those grades tell me what percentage of my overall account I should risk on that entry signal. My entry signals, the A1, the D1, and the D2, all have very precise entry signals, like very precise prices that we need to get in when a formation presents, but they also have detailed stop losses and detailed take profit and exit strategies. So when we see the A1 presenting, the candle closes, the formation is there, you go down the checklist. As you go down that checklist, if there's nothing wrong with it, when you ask yourself what could be better with this, if there's nothing there, then that would be an A or maybe a B setup, and that would be something you'd want to put more size into, logically. But at the same time, if you go down your checklist and yeah, that is an A1 formation or a D1 formation, whatever it is, but maybe it's not that perfect. Maybe ADR could have been better, or the liquid 50, TDI could have been better. If there's things that could be better about the trade, that's where I go in and size it down as a B or a C, and I trade it smaller, and I don't stay in it as long. Now, it's not just the position size that the grade determines. It also determines how long I stay in the trade and how I move my stop loss. For example, if it's an A setup and it goes 2 to 1, I'm not going to move my stop loss to break even, because I think A setups can go to 3 to 1, 4 to 1, 5 to 1. That's what makes them A setups. So I leave my stop loss at the original position there a little bit longer. I wait for it to go to 3 to 1, 4 to 1, and then I move the stop. But if you take a trade like today, where it's a C setup, as soon as I go up 1R, I take some of the profit, take some of the trade out, and I move my stop loss, because with C setups, you never know what's going to happen, and today's a great reason for that. Now, of course, there's going to be C setups that I've talked to you guys about in other videos where they run 7R on a C setup. It happens. But for me, the consistency in trading comes from being really picky and making sure that in those less probable trades, the B's and the C's, that you don't give back any money. If you go into profit on a C setup, you should never give back money, ever. The only time I'll ever give back money really is in an A setup that doesn't end up working out, because that happens. That's when I'm in the trade looking for more and it ends up turning against me. So again, even there, listen to what I'm saying. The consistent bag, no matter what the grade is always the way to go if you're trying to build, in my opinion, a long-term business in this industry. Now, you can see this morning I was quick on this trade. There was not a lot of time really from when I took the position to when I was out of the trade. It was 30, 40 minutes, and it trickled sideways here at yesterday's high, which was a clear level that we saw, that we knew it was going to have a hard time breaking. So when it couldn't break, I started to close some of this trade, as you'll see here on the 1 minute on the left side. Now you can see from when I took the position basically straight into profit, I closed about 50% of the trade when we were up over 1R, and as it came back down and started to move kind of sideways there off yesterday's high, if I zoom out you can see it right here, as we started to move sideways there and we started to break under the EMAs, we broke the 50, couldn't get back above with a higher high. Instead, we were making lower highs. So because we couldn't get back through, that's where I ended up taking a little bit more, and then I ended up getting stopped full out here in profit as it came back down. Now, look, had I not moved my stop into profit, this would have came down and taken me out here for a loss at whatever position size I still had in. But because I followed my grading rules, meaning for a C setup, take some off at 1R and lock the stop, because that's what I do for all my C setups, it was a profitable day.